Joining us now, Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. He hates tariffs, and you still do not think there's much left. I think you had to be surprised by the 20% snapback in the S&P with the tariffs front and center. And at this point, you think we're at the high end of where we're going to get this summer if tariffs continue to be a problem, right?
Well, first, Joe, let me say I hope it's not all about the hair, because I would be totally lost.
No, with you, it's all about the gray matter. Yeah, you're right. It's all about the gray matter.
Let me tell you, yes, I am against the tariffs. And by the way, if the tariffs had stayed where they were in the first term, I think the Dow would be 2,000 points higher. And if the tariffs had remained where they were on April 2nd, I think the Dow would be 8,000 points lower. And, and I actually turned bullish 3 weeks ago when the negotiations went so well on the first meeting between Xi and Bessent. Well, it wasn't Xi's representative and Bessent on trade talks. I mean, no one expected it, to go from 145% down to 30% and all that. And I said, listen, the market can live with 10 and 30, 10 base and 30 on China. Now, I know the aluminum and steel have 50, but I think the market can definitely live with those. And if it doesn't get worse, I think there's no reason we can't push to new highs. If it gets higher and ramps up there, then the ceiling is on.
I wonder, we're hearing now that India is extending the talks, which may or may, we'll talk to Kevin Hassett, maybe that would be a positive. China talking again. Near term, it may not be the whole summer that you're worried, right?
Or well, maybe I hope not. I mean, very honestly, I don't want to call it the taco trade, because obviously, it sort of demeans Trump. But the truth is, he's been, very much more flexible. I mean, we've always known that his bark is louder than his bite when it really came to these tariffs. And I think the initial reaction, honestly, sort of shocked him. And he said, oh, wow, I better pedal a little easier on that. I mean, listen, we're not seeing Peter Navarro the way we did, in April, are we? We're seeing Bessent much more moderate. He's been more moderate. He knows this takes time. These trade agreements are not, he gave the EU, yes, I give you 1 day. Well, it's been 1 day. These things do take time. And by the way, yes, if we can lower some of their restrictions, we will be better off. There's no question about that. But, it's a big consumption tax. And, let's face it, most of the 90% of the manufacturing job loss since World War II came before we even had NAFTA. Or before China entered the WTO. I mean, it's a natural evolution as globalization and the world economy really picked up. So, we're not getting back to the 50s. And I think we have to look ahead to, what economy we're looking forward to, rather than back to, what looks like the good old days.
I don't know what. Taco trade. It's either that or the art of the deal. I don't think it's helpful either, because it just probably makes him mad, and
it inflames him, and it could make him more impulsive on. Hey, now I'm going to show him I don't back down. And then, wow, I mean,
if you I'm not saying that these unfair practices have held us back. I mean, obviously, we're the greatest. We've had the greatest economy around. But if we could get a 50% lessening of some of these restrictions, if it's not perfect, it's not a removal of everything, it's not a completely fair trading. But anything happens on the margin, and then both countries get to say, okay, we're done, and now back to business as usual, and you get 50% better. I mean, that would be good. That would work.
I mean, that would work. And as I've said before, if you're going to be a world reserve currency, which is a position that Donald Trump says he definitely supports. Remember, he threatened the emerging markets, say, don't try to put a currency on us above the dollar. You need to run a trade deficit. You have to have more dollars flowing abroad than you take in to provide that sort of currency. So, the idea of eliminating all deficits is something that really would hurt the United States. And I hope that the administration is coming to realize that.
But it was nice to see the trade deficit. I mean, 60 is a lot better than 120 in terms of, if everything does quiet down tariff-wise, Professor, then Jay Powell could cut rates. Too. You'd have no reason not to.
I agree with you. I'm actually one of the dovish around. I think he should think about it, because I think we might get a couple soft figures, pretty much on expectations on the CPI. But I see some good trends, and especially I actually see really outside the tariffs, which will begin to kick in a bit and will raise some inflation. But outside of that, I really see a downward movement. And, I think, he can afford to lower rates. I'm sort of surprised about, Kevin Warsh has been, as you guys have discussed, hawkish and, mentioning, Powell has, 9 months, 10 months? That would be real early to try to pick a successor. But nonetheless, I do think that he has room to lower rates. And, given the inflation, ex-tariffs, and given the slowdown in the economy, employment growth is just about 1/2 to 1/3 what it was last year.
Right. All right. We're looking at a 10-year now, over 4.5 again. But Professor Siegel, we appreciate it. Thank you.
Thank you, Joe.
Carl, thank you so much. Apple Park in Cupertino, California, the backdrop today for a special halftime report on location. Welcome, everybody. I'm Scott Wapner. It's great to have you with us as we await the start of the company's Worldwide Developers Conference. CEO Tim Cook will take the stage for his keynote in just about an hour, amid a flurry of questions about the company he runs. An AI strategy plagued by doubt and delay, a stock price stuck in place as the trade war weighs heavy. We'll ask our experts over the course of this next hour if this will be the event that gets things back on track. The Investment Committee, they are with me back east today. Apple shareholders Rob Sechin of New Edge and Joe Terranova through his Joe T ETF, and one committee member who sold shares many months ago and hasn't looked back. Stephanie Link along with us today as well. Super analyst Dan Ives and all things tech expert Alex Kantrowitz along in just a bit as well. What the stock has done year to date, it's obviously dramatically underperformed its Mag 7 peers, and by no small amount. Tesla feels like it's in its own category, of course, but if you look at that performance on a list, you will see there is Apple. It sticks out like a sore red thumb, down 18%. That stock is on the same time frame. Now, Microsoft today is going up for 8 days up in a row, right? So it gives you the divergence between some of these names. Rob Sechin, I said you own the stock and you own it outright. What are your own expectations coming into today?
Well, maybe you get some exciting news from this conference, but given their slow progress on AI thus far, Scott, I think it's fair to be skeptical. That said, historically, this stock has really performed well in the 3 months following this conference. Over the last 15 years, the average gain is about 12%. And there was only one down year, and that was the 2015, the year of the China growth scare. And last year, we were up 14% in the 3 months following. Obviously, they delivered that news, which never met expectations. But we realize this may be a sell the news moment for them if they don't deliver something, absent a big AI announcement. But it's hard for us to be too pessimistic on this name, and it's hard to be materially underweight Apple, given their management is typically shareholder friendly. They have a tremendous balance sheet, and there's a ton of negative news surrounding this stock. So when you have that kind of cocktail, we're neutral. We decreased to neutral. We didn't want to go lower than that because of what we saw in the second half of last year. So long-term core holding that we're neutral right now. Hopefully we get some good news.
Yeah, neutral, Joe. Joe, you no longer own the shares outright, but as I mentioned at the very top of the program, you do through your Joe T ETF, which looks at quality and momentum. This stock, I don't think anybody would argue with the fact that it's quality, and Rob lays it out as to why, and you've been punished over the years if you've gotten too pessimistic. But what about momentum? Can today get the momentum back for Apple stock?
Okay, well, first of all, as it relates to today, I think there's one important word, and I heard Rob mention it, and that's progress. So potentially, Scott, just enough progress on the development of AI and the ability for developers to contribute there, that might just be enough. And I think one of the reasons why that actually might be enough is because if you look at the sentiment surrounding this stock, and it's had an awful year, and it's probably directly attributable to the trade war and sitting in the center of that contentious situation right now. But if you look at sentiment, you take the 7 largest technology companies, Apple has the lowest percentage buy rating of all those 7 companies at only 60%. So there's not strong, compelling belief behind this company. It's kind of waffling. It's kind of, as Rob said, you can't not own it, but you're not really excited to own it because is it really a growth stock anymore? It really trades more like a value stock. Why are you owning this stock? You're owning the stock because of the ecosystem, high margin services business, the ability to return capital to shareholders, but the revenue growth is missing. You haven't seen double-digit revenue growth in this company since 2021, and the expectation is as you look forward over the coming year, you're not going to see anything more than maybe mid-single-digit revenue growth. And you mentioned Microsoft, that's going to give you double-digit revenue growth. Alphabet's going to give you double-digit revenue growth. So this is really becoming more value tech than anything else, and it's not that exciting.
I'm trying to figure out how you can call it value tech when it trades at 26 times. It trades at a growth premium. It doesn't trade as a value stock premium in any way. So for somebody who owns it, you're suggesting it's overvalued?
I think potentially it is. I think over the last 10 years, the average valuation on stock is somewhere around 22 times. By the way, I have it trading at 27 times. I could be wrong on that. It's down from 34 times.
Fine, 27, 26. They both make the point. It's not trading at a value multiple.
Okay, but they're both above the historical average over the last 10 years. And I'm not growing at double digits anymore. I'm not growing like I was back 7, 8 years ago at 20+%. I'm growing at 4% at best. And there are years like 2023 where I'm actually having negative revenue growth.
Steph, you've been the doubter, I suppose, is the best way to say it. You have a sell rating on the name. I mean, because you did own it and you sold it. And as I wrote in the intro, you haven't looked back. And one of the reasons is the valuation, right?
Oh, yeah. I mean, 26, 28 times forward estimates for 7.8% earnings growth and 5.1% total revenue growth. I'm not paying 28 times for that. And it's really interesting. It's like what a difference a year makes. Because last year, I actually bought the stock ahead of WWDC because I expected them to talk about AI and that to be the catalyst. Fast forward to where we are today, they haven't delivered on AI. And as a result, iPhone 17 is not going to be a super cycle unless they have AI in it. So to me, I think you have time. And oh, by the way, yeah, the tariffs are a big overhang. If there are 25% tariffs on Apple, they're going to have to increase pricing, something like $200 to $400 per phone. So, that also might eat into the demand side of things. So I just think this is kind of dead money. I know it's down a lot, but it's just not cheap enough for me. And I think you have time.
It's really amazing what's happened, too, in the last year, Steve Kovac. We can take people through a timeline to remind everybody. Remember, we sat here a year ago amidst really profound optimism about what was going to happen here. Some of the analyst notes leading in, let the games begin from Loop Capital. Dan Ives is going to join us in just a moment. He said that this event 1 year ago was going to kick off an AI-driven growth cycle, a new frontier. Those are his words that he wrote just ahead of this event 1 year ago. And as we see this timeline here. It was in June of 2024 that Apple did announce Apple Intelligence right here at WWDC. The first features released in October of that year. And then December, the ChatGPT integration announced. The stock hits a new high. It was almost a straight line up to the right from WWDC until the end of the year when that stock hit a new high. And then some of the issues started to come about and the stock started to go south. Improvements were delayed for Siri. The AI executive shakeup happened. The rollout in China was delayed, according to the Financial Times as well. So that's where we were. Today is where we are. As we wait at news from the U.S.-China trade meeting today in London, Megan Casella at the White House for us today with the very latest. Hi, Megan.
Hey, Scott, that's absolutely right. These talks now are in their 5th hour, having started just after 8 a.m. Eastern. And, you know, unlike the Geneva round, we are not really expecting a big breakthrough here on the tariff front, for example. This is really a much more technical round of talks, mostly centered on 2 issues. You can see the live picture there of the location where these talks are ongoing. But the 2 issues here, Kevin Hassett told us on CNBC earlier today that the goal for the White House was to get a handshake agreement with China, restarting the flow of rare earth minerals, likely in exchange for the U.S. then loosening recent export controls. The Wall Street Journal also reporting just in the last hour or so that the president authorized Treasury Secretary Scott Bessent to take some steps to undo some of those recent restrictions on things like jet engines and chip software in order to get these talks moving. So we're waiting for more on that. And in the meantime, Scott, as for the other big story here, that's the fallout between President Trump and Elon Musk. And after last week's really tumultuous back and forth between the two, Musk was posting on social media this weekend in support of the president, mostly about the ongoing LA protests. But President Trump told NBC in a phone interview on Saturday that he had not spoken with Musk and he did not expect to. The president saying that while he would be allowed to cancel government contracts with Musk's companies, Starlink and SpaceX, he was asked about, he says he hasn't given it much thought. He also called Musk, quote, very disrespectful. And he said he assumed their relationship was over, saying that he saw no reason to try to repair it. So, Scott, likely not the end of what we're hearing between these 2 men, but for now, at least the president appears to be trying to move on. Scott.
Megan, thank you. Megan Casella, North Lawn of the White House, with the latest on both of those fronts, which have obviously garnered a lot of interest. Stephanie Link, on the market standpoint first in these trade talks, what are your expectations? What do you care about most coming out of this as to where you think stocks go from here?
Well, Joe used the word progress in the last segment, and I would say the same thing. I just want to hear progress. I don't think we're going to get a lot of detail, unfortunately. But Scott, you know what's interesting? In the face of all of this uncertainty, we are still growing right now. GDP almost at 4%. The Atlanta Fed tracker came out late last week at 3.8%. And I went back and I looked at the first quarter GDP numbers. And remember, the first quarter, which was actually a negative in terms of GDP, but final sales to private domestic purchasers rose 3%. Business equipment sales rose 22%. Consumption up about 2%. So we are in a position to handle this very well. And why we care is because we always bring it back to earnings. And I think earnings are going to continue to deliver and exceed expectations. So I just want to get this behind us and let's start focusing on the other parts of the administration's growth agenda, meaning lower taxes and also deregulation. And I think that will be very much welcome from me anyway.
Joe, I want to get your thoughts on the falling out between Elon Musk and the president. You own the stock. I don't think we've heard from you directly related to that issue yet. A couple of calls on it today do, however, mention it. Downgraded at Baird today. They say that Musk's ties to President Trump have added considerable uncertainty. Also downgraded today at Argus. They're concerned that the war of words between the two, along with the expiration of EV credits, could further weaken demand for new Teslas. How are you thinking about all of this? I feel like Joe's audio is having a bit of an issue. We'll attempt to work on that. But you did see those 2 downgrades today.
I'm right here.
So now we can hear you, Joe. So tell me how you're thinking about this.
Yeah. So look, we what the strategy that we incorporate, it's rules based. So I have a universe of 500 stocks. I can't change that 500 stocks without going to the SEC and changing the prospectus. I'm not going to do that. But I will say this: if I had the ability, if I had the discretion to kind of tweak the strategy, there are certain stocks where I would say, okay, you know what? Forget about the actual capital that we're going to expend on investing. Why are we expending the mental capital in being in these names? Because there's such a chaotic nature surrounding Tesla, and that chaotic nature has existed for far many years. He is, without question, arguably the world's greatest innovator. He's is a phenomenal businessman. And when he's focused, when he's specifically focused on Tesla-centric strategies, that's when the stock thrives. But when you have all these extracurricular activities that are taking him away from thinking about the innovation and the future of the business, it's just too chaotic. And I don't understand why anyone who has the discretion would exert that type of mental capital. In addition to that, remember, the significant challenge that Tesla has in terms of margins is because they are reliant on a lot of components and materials from China for the development of batteries. And because of the high tariff rate there, that's going to continue to be a challenge for this company, and you're going to see margin compression as a result of it. So there's nothing we could do. It's in the universe, so we'll maintain positioning there. But if you have the ability to exert discretion, I just don't understand why you accept the chaotic nature surrounding it.
All right. Yeah, you sound a little frustrated, I think, as many have, as they've watched this stock do, I think, what they didn't expect since the election. Joe, thank you. Guys, let's do some final trades. Stephanie Link, what do you have for us first?
Welcome. It was an outstanding quarter, conservative guidance.
Thank you. Joe Terranova.
In the last 5 years, Boeing has never showed up on a momentum screen. It's starting to do that now.
All right. Rob Sechin.
Qualcomm. I think this alpha wave deal shows that they're elbowing into the data center market. It's a cheap way to play the semi space.
All right, guys. Thanks so much. I'll see you on Closing Bell.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It's Monday, June 9th. It's after the close. So we're going to take a look at the indices. We're going to look at some of those stocks that they just talked about on the halftime report. Jeremy Siegel talked about the markets. We're going to look at those as well. He seems to feel pretty positive as long as the tariffs remain around the same percentages that where they're currently at. I kind of disagree. I think that they need to be reduced even more to see the market really take off. But we're also going to look at the Mag 7 stocks, which they talked about. Tesla, for example, and Apple. We're going to look at those. It was down 1.21%. We're going to look at some member requests too, right there. And let's see, what else will we take a look at? We'll take a look at the sectors like gold and Bitcoin and a few others. Before we get started, I want to just show you guys how the markets actually performed for the day. You'll see that the Dow Jones was actually flat, 0%. So you can see throughout the day, basically, in the morning, what happened was price did actually drop down and then moved up to these levels here, around 42,850 or so. And then it dropped down to 42,761. So very flat from the prior day on Friday. NASDAQ was up just slightly, 0.31%. The S&P 500 up 0.09. So it was up throughout the day, and then towards the end of the day, you can see here it was around 3 p.m. The market started to pull back. Same thing happened here with the Russell 2000. So it basically was up 0.69%, but did pull back a bit. Now, the interesting thing that I'm seeing here, we do have some more metrics that we can look at. So, for example, today, there were approximately 62.5% of the stocks were advancing. 87.5% were experiencing new highs. There's about, let's see here, 76.7% above the 50-day moving average. And now, for the first time, I think, the majority, 50.4, okay, is above the 200-day moving average. So the market's looking more and more bullish, which is positive. Let's take a look also at the heat map here. And you can see that Tesla was actually up today, 4.55%. Amazon was up 1.6. Google was up 1.39. Most of the semiconductor stocks were in the green, except for Broadcom, which was down 1.07. It looks like the insurance companies didn't do so well today. Some medical instrument companies like ISRG, and it was pretty mixed, as you can see right there. So let's go ahead and take a look at the indices here first. We'll take a look at those, and we'll start off with the Dow Jones, and we're going to do the daily time frames here. So you can see that we basically came to that 428.65 level, all right, and then pulled right back under it. So it pierced it once again. That happened on Friday last week. There's the candle right there that created a spinning top. Now we've got another spinning top. Look at that, 0%. So nothing really happening here. It's just, I think that they're just waiting to see what happens with this deal with China, pretty much. Like I said, like basically, yeah, S&P 500 posts back-to-back gains as traders optimistic about the U.S.-China trade talk making progress, but nothing's really been occurred yet. All right, so there might be more information about that tomorrow. So we'll wait and see what happens there. But yeah, let's go back now. So FEZ also stalling, right there at that 60.14 level. It's right under it. It closed at $60.06. That's the Euro Stoxx 50. IEV, pretty much also stalling here, not really getting above the high right there from last week, Thursday, June 5th. It's still under that level. It's down 0.09%. The IWM, which is the Russell 2000, that moved up 0.69%, but look what kind of candle it formed. It's a reversal candle. So I'm not too optimistic about that. Now, the other thing that you also have to keep in mind is that, like, look where that 200-day moving average is. It's literally hovering right above it. And if we switched it onto the weekly chart, you can see more resistance there. We're using the Ichimoku indicator, and when the price is under the cloud, not a good time to be adding positions, basically. How about the QQQ ETF? This one, on the other hand, is looking more and more bullish, okay? Both on the daily time frame, and look at this, on the weekly chart, for the very first time, we've got, in a while, we've got the Tenkan-sen crossing above the Kijun-sen. That's really bullish. Now, the question is, can it break through this prior high of 540.81? If it does, then I think there's a continuation that we could certainly see an expansion. If we stall here, and then we start seeing some negative candles, okay, well, that could be very detrimental here to this. That would be basically a triple top. Here's the first one, the second top. That would be a third triple top. And remember, that's a very bearish pattern, guys. I'll show you guys that pattern right here on the patterns cheat sheet. All right, there it is. Triple top. It's a bearish pattern. Again, it's when price basically, moves up to a certain level, comes down, comes right back to that same exact level, drops again, comes back to that level, drops. And then if it breaks through that first low there, that's very, obviously that's going to probably continue to the downside. It's because basically the bulls were, unable to break through new levels of resistance. They weren't able to get the price up further. The demand for the ETF is just not there. But right now, it's still technically moving in an uptrend. We'll give it the benefit of the doubt for the time being. Now, the S&P 500 also did something bullish. Let me get rid of the lines for a moment so you can see. Right there. That's when the faster moving average crosses above the red line, which is the slower one, the Tenkan-sen above the Kijun-sen, the 9 above the 26. Okay, so that's really bullish. Now, the cloud itself also became bullish for the first time. So this is really good news. When I say first time since over here, it's been multiple weeks now where the Senko Span A, that light colored line that you see there, has been under the purple, and that's bearish typically. The fact that it's now starting to, basically pop its little head right there above, that's very bullish. How about the VIX? The VIX is basically stagnant. It's just kind of like right there at 17.16%. It was up just slightly, 2.33%. This is conducive to a continuation to the upside for the markets, though, because we want to see that declining, the volatility. All right, let's look at the CNBC stocks that they talked about. Broadcom was one of the stocks that they brought up. Now, let's look at this on the weekly chart. You can see it's been, we've got a shooting star from last week. That's a bearish candle. We've talked about that many, many times. There it is, shooting star. Long wick, small red body. Now, it doesn't have to necessarily be a red body. It could be a green body, or in this case, my light blue colored that I have for bullish candles. But it could still lead to a decline. Now, it did not break through the low of that candle. See how it held its ground right there? So that gives me hope that Broadcom, as long as it stays above the low of the reversal candle, I think there's a good possibility that we'll see it move back up again. This might be just a slight little pullback. On the weekly, here it is in the daily. You can see it's pulling back now for 3 days, basically dropping. It's still above the 26 period, so we'll see what happens there. Now, Boeing. BA is the ticker symbol for Boeing. This one's actually technically looking a lot more bullish. Take a look at this. What Joe T mentioned about it, the momentum coming back into this. It's true. The momentum is coming back in. You can see here, that's the ADX. That's my measurement for momentum. I use this at a setting of 9. And if I notice that the white line there is moving up, as you can see right there, and the green line is above the red line, which is the positive DI9, above the negative DI9. If all that is happening, plus price, as you can see here, is above the Ichimoku cloud. Price is above the moving averages and the 200-day moving average, and Senkou Span A is above the Senkou Span B, and the Chikou Span, which is the closing price, okay, projected 26 periods ago. If that's above the candle 26 periods ago, if all that is happening, that's super bullish, and that's a weekly chart. So I think there's some potential here. The only concern I have with Boeing are the fundamentals. I mean, look at the profit margins, negative 16.58, operating cash flow. Look at this, negative $10.3 billion. They're coming out of a situation. Let's take a look at the most recent earnings by just typing in BA here. We're going to look at this in FinViz. So you can see those prior earnings results back here, right? Look at all that. So 1, 2, 3 earnings results that were negative. The last one back on June 28th, 2025. January 28th, 2025. And it just was looking more and more bearish. Now this most recent one, though, as you can see, has been bullish, right? So the one that came out on April 23rd, you could see that the revenue was up slightly 0.7%. EPS gap was up 75.8%. So all those things led to and you can see what it led to, price breaking and getting above the Ichimoku cloud. And then look at that nice move up. So now in the last basically, quarter, performance for the quarter is up 48. I'm sorry, is that 48? No, it's 46.82% up. That's huge. It's got more positive upgrades here from the analysts. And so it just, let's see what else we can look at here. The net margins are improving. You can see that here in the histogram. And let's take a look at the price. That's the quarterly. Let's look at the free cash flow on Boeing real quick too, while we're at it. Okay, so free cash flow is also improving here this last quarter. So that's good too. But it's still in the negatives, right? So it's really up to people to determine whether they want to jump in on something like that. But it's been dropping for so long now, since 2019. Its highs back here are $446.26 per share. That was back on March 1st of 2019. And I mean, this stock had dropped, down in 2020, the lowest level there, 78% in 1.1 years, right? So like a year and 1 month, 13 months. And then basically since that point, it has moved up about approximately 129%. So yeah, and the technicals are starting to look pretty positive. So I'll give it the benefit of the doubt as well. QCOM, which is QCOM is the ticker symbol. This one here, unfortunately, is not technically sound. Why? Because price is still under the Ichimoku cloud. And so personally, I wouldn't be jumping into anything like that. You can, if we draw just a traditional trend line from this high all the way through, you can see it's still stuck under that trend line right there too. So I wouldn't be touching that on the weekly chart. And on the daily chart, yeah, it's starting to look a little more bullish, but that 200-day moving average is right there waiting. And it has not taken out this high right here. All right, let's get into the Mag 7 stocks. And here's Microsoft. I like Microsoft quite a bit. Here's the weekly. Let's look at the trend lines. Last week, it broke through that 468.35 level. Here it is in the daily chart, up 0.5%. Not a big move, but it's holding right above that prior monthly resistance. So I do like Microsoft. Nvidia is stalling right at that high. Look at that. It came right through. It pierced the 143.44 level and came right back under. Right? So I just hold off a little longer. Patience, right? Google. All right, this one's starting to look more and more positive on the daily time frame. You can see it's a second day now. This was Friday. This is Monday. Now, I would probably want to hold off just a little bit longer. I'd like to see it get above that prior high right there. And then maybe it would make sense on the daily time frame. But on the weekly chart, I think it's above the cloud, but the Tenkan-sen, the faster moving average is under this low. So it's not a perfect chart on the weekly. But it does look pretty good on the daily. Looks like it's going to probably take off soon, honestly. Tesla, and remember, you can also use different time frames. If you're a more active trader, you could use the daily time frame and then also switch it to the 2-hour for a more optimal entry point. So like if I want to switch it to a 2-hour, I just click here, and there you can see it's a little bit more clear. You can see that prior high right there. Okay, and that's what I'm talking about. It needs to break through that level, which is 176.77. I'll go ahead and throw that in there as a reference point. That's what I'd be waiting for personally. And you can see that there's more resistance over here, but yeah, if it gets above that, there's some good potential here for Google. Tesla is under the Ichimoku cloud. Yes, it was up 4.55%. That's the 2-hour time frame we're looking at right there. Here's a daily chart. We've got a bullish engulfing pattern. So that's really positive for the stock on the daily chart, but it's still under the moving averages here. We do have a bullish cloud on the weekly chart. It's holding up inside the Ichimoku cloud. And so, but it's, it's sort of like stuck, there's no real buy signal here as long as price is under or inside the cloud or under the moving averages. Amazon on the weekly chart is looking more and more bullish, but the Tenkan-sen is still under Kijun-sen on the weekly chart. And on the daily chart, it does look pretty good. In fact, this one, it looks kind of similar to Google, right? We were just looking at Google. The only difference is this one actually broke through right there. So Amazon looks good on the daily. I do like the daily time frame. And we can see that again if we switch it to a 2-hour. There it is, breaking through that level. Okay, so it's looking strong on the 2-hour. Apple is inside the Ichimoku cloud. Nothing to do here, folks. Down 1.21%. That's the 2-hour. Here's the daily time frame inside the cloud as well. And on the weekly, it's under. So it's very bearish territory for Apple. I wouldn't be considering it at these levels here because it's still out of favor. The market's not interested at this point. And Meta, on the weekly chart, it's above the moving averages, but Tenkan-sen is under Kijun-sen, so it's not a perfect chart there. How about the daily? Much more bullish. It broke through last week on Friday. You can see that candle. So still holding up above it, but I don't like this. It's like a very negative reversal type candle. They call that a gravestone type doji. This is a spinning top. So I don't like this, these two candles here. Okay, let's take a look at the member requests. So EOSE, EOS Energy Enterprises Inc. Weekly chart. I think I already did this one last week. I can't remember. I'm pretty sure because I remember the profit margins were really high, 3,206 negative 0.3. So it's like talking about how it's not typically a good idea to be adding positions on a stock that has such a very high negative profit margin. That's really, really bad. But yeah, right now it's starting to look a little bit more bullish. It was up 8.85%. This is a very volatile stock. Here's a weekly chart. Here's a daily chart. It's under the cloud right now. You can see, yeah, it's not looking that bullish. I would hold off, and I wouldn't consider this one, honestly. GDE, on the other hand, experiencing all-time highs, up over 24% this year. This is the Wisdom Tree Efficient Gold Plus Equity Strategy Fund, looking strong on the daily chart, and here's the weekly. Nice chart. IDV, same thing, broke through this monthly resistance here at 34.12 on the weekly chart, and this is what it looks like on a daily. So I think this has potential to move up. This is the Select Dividend Index Fund. How about STX? This is Seagate Technology Holdings, and on the weekly chart, wow, look at that. Look at all those very bullish candles week after week after week, right? We're talking about now more than 2 weeks, now 2 months. It's 2 months and 1 week there. Actually, more than that. It's 2.5 months, okay? I would be extra cautious with this one because it has moved so much. I mean, it's just like not stopping. It's on a tear, but all good things eventually come to an end, unfortunately. So at some point, they're gonna the people that are holding this position are gonna get a little bit like, okay, maybe I should take my profits here, and if enough people come out, it's gonna push the price under the Tenkan-sen, and probably maybe it will drop some more. But right now, it's still holding up. So if you have a position on this one, here's a daily chart. You can see how it's holding up right above that moving average perfectly for multiple days now, weeks, okay? Let's look at the sectors, some of the strongest ones here. GDX, a bullish harami is what that is. It's when you have a red candle, it's large, but then a smaller bullish candle that follows it. And harami stands for pregnant, so it's like the body, as you can see here, is the larger body and the smaller body. So real easy to identify this one. And that's bullish. So there's a good chance that the gold miner ETF will do well tomorrow. It's a higher probability. We'll just say that. It was up 0.99%. Let's look at XLF financials, down 0.55%, but holding up right above the moving average. So that's good. Industrials also looking pretty good, holding up above that 144.51 level. I like it. Bitcoin breaking back above the 109.809 level. So that's good. So it's $109,809. Got right back above it. It looks like the Tenkan-sen might cross back above the Kijun-sen soon on the daily chart. One positive note, the green line, the positive DI9 did cross above the negative DI9. So that's good. That's a good signal. So you can see in the past, for example, back here, when the green line crossed above the red line, if we look straight up, okay, it happened on that candle right there. It led to a nice move. So over here, where the red line crossed above the green line, if we go straight up, what did that lead to? A drop. So the fact that this is crossing, that's higher probability now. No guarantees in the market, but a higher probability is going to move to the upside, Bitcoin. XLC, communication services sector, is also looking okay, but the problem is we've got a negative candle here on the daily. Here's the weekly chart, and here's the 2-hour on communication services. It's not looking terrible because it's right above the Tenkan-sen on the 2-hour. All right, let's look at utilities next. XLU, stalling at the Kijun-sen. That's good, but it was down 0.64%. Overall, I do like it. Not a whole lot negative things to say about it. Okay, IBIT is the Bitcoin ETF, and then, very similarly to the pair here, the Bitcoin US dollar pair, it was up 4.24%. It's just an alternative way to own Bitcoin. And another cool thing is you'll notice that it looks like it broke through that trend line. Yes, it did. So there's the high of those two candles that draw the trend line. It was under it. Now it's above it. Good potential here for this to move up. And gold is still in this, what I call a bull flag pattern, okay, which is essentially, this is what they look like. For those of you who are unfamiliar, it's a move up. You get a small little decline here, and then if it breaks through that trend line right here, okay, then that's when you can expect it to continue its move up. Right now, it is just kind of like, just going sideways. All right, so there's not much to do here with this one, but it's looking, this is a bullish harami pattern, so I think it's more likely to pop up tomorrow. All right, and that's going to do it for the sectors. Now, I am going to be doing one more video later today, okay, and it's going to be on the country ETFs, and I'm going to use my proprietary. I'm going to go into all those country ETFs there, Japan and Australia, Canada, the UK, you name it. And what I'll do is here's gold, for example. This is what I'm going to use my proprietary indicator. So it's very different than what we just saw there. This is the proprietary indicator that I use. Here's gold. You can see if I switch it to a daily time frame, what gold looks like right there. Here's a weekly chart on gold, still very positive. But basically, it's so we're going to take a look at those country ETFs with this indicator on, and I'll give you my take on that. Here's how you can get access to that video, that exclusive video that I'm going to do for today for Patreon members. What you want to do is come to Blue Cloud Trading, and right here under 9 more links, you'll scroll down, and there's the link for Patreon, and it's going to be for paying members. Now I only charge I charge under $5 a month for the Patreon, and there's other videos there too, so you might want to check that out. If you like the software that I'm using, TC2000, okay, where you can create your own indicators just like this one here, consider basically trying out this software. It's great. It's called TC2000. You can get a $25 coupon right there. You click on this link, it will pop up this screen. You enter your email here, and then, as it says right here, you'll receive a $25 coupon towards your TC2000 service, courtesy of Blue Cloud Trading. All right, as long as you haven't used the service in the last 12 months. So that's the key thing. Here's the pricing over here. Now you can use it for Windows, and it will run on Mac if you have the Parallels app on your Mac. If you don't, and you don't have Windows, just use the web-based version. Okay. Here's the pricing, and here's the monthly. So you can see it's like $10, $29, or $59.99. I recommend the gold because it has a lot more features that you see right here, like drilling down through sectors and industries. You can plot fundamentals. You can track with 100 alerts. You can draw on the charts with the gold. You cannot do that with silver. As you can see, the only thing you can do with silver is this little thing right here, custom layouts of award-winning charts, and watch this. So you could use this for free for a couple of months, or you can use the gold service for $29.99, pay $5 out of your pocket to try it out. And then the platinum has a lot more features. You can check those out right there. You can have real-time data feeds, right? Second by second, like I do. That's an additional $15 a month. For the U.S. stocks, you can see options, indexes. Okay. If you want more alerts, you can pay for those. Let's see. You can even add Bloomberg videos and Yahoo Finance videos. There's a whole bunch of things you can do with this software. And if you basically pay annually, it brings the price down from $29.99 to $24.99. So you get, it's like brings it down. If you do it every 2 years, you pay for the 2 years. It brings it down to $22.50 per month on the gold. So that's not bad. Saving some money there. Okay. Guys, that's going to do it for this video. Thank you for watching. And don't forget that just this last weekend, I did put together a new members only video. This one right here, 1 day ago. It's an hour video. I go over my entire portfolio, and you can access that along with all the other members' videos by hitting the join button, which is next to the subscribe button. You click on the join button, select Blue Cloud Trader or Blue Cloud Legend. If you just want the videos, you become a Blue Cloud Trader. If you want to get access to the daily trade updates of all my trades, you become a Blue Cloud Legend level member. All right, and I post those. There's a new tab that will pop up once you become a member, and it's going to look like this. You'll see this membership tab pop up. You click on that, and that's where you'll find the daily trades that I place. Guys, thanks for watching. I'll catch you all in the next video.